Right, in focus.
In fact, that last comment brings us on to exactly that point. What we are watching at the moment, the UK economy, are we losing momentum? I would say that because the OECD flagged, that's the Organisation for Economic Cooperation and Development, flagged that it expects to see slowing growth in the UK going forward in a paper it released yesterday. Today's soft industrial manufacturing production numbers may be a sign that there is some truth to this. The chart in the middle here plots the UK GDP growth rate since 2010 over the industrial production numbers. So there is a relatively close correlation between the two. The thing I think is interesting is that we still, as far as GDP growth, have yet to bust back above that downtrend drawn from mid 2014. And I also flag in the red ellipse the divergence between that appears to be emerging now between the GDP growth rate and industrial production. Sterling has been weak of late, as we've said. It's particularly against the US dollar, and it seems now that the UK won't be the first mover in US interest rates. I think Deutsche Bank flagged they thought Q2 2016 was the earliest time the UK would raise rates. So the thing to watch out for now, if you are on the bearish tack, would be any slowdown in the UK service sector, which would be a big issue for the economy, because obviously that's the driving force. Manufacturing, industrial production is very much second tier. That's marginal, perhaps, to the UK economic performance, but any slowdown in services now would be...
Do you think we might get away without it, actually? I mean, the services may remain...
Well, I mean, it could be, you know, the services does enough to...
A new era, new paradigm.
Well, perhaps. I mean, you know, we still do very well in manufacturing, the things we do, but services is certainly, you know, the main thrust of the UK economy, it's true to say.